Stocks continue to rally on Wall Street ahead of the inflation print for May. The Nasdaq and the S&P 500 closed at their highest levels in more than a year on optimism over the Fed skipping a rate hike when it announces its policy decision tomorrow. Stocks in the Asia-Pacific opened largely higher on bullish cues from Wall Street. The SGX Nifty is signaling a higher start for the Indian market. Oil prices dropped nearly 4% with Brent trading under $72 a barrel, the lowest since December 2021 as global supply rises, but the outlook on demand remains uncertain. Goldman Sachs too cuts its price forecast for December to $86 a barrel, a sharp cut from earlier projections of $95 a barrel. Retail inflation comes at a 25-month low, cooling at 4.25% in May as food prices ease. Industrial output picks up in April, registers a growth of 3.2% on a yearly basis. The SEBI bars SL Group Chairman Subhash Chandra and Zee Entertainment CEO Punit Goenka from holding key managerial positions at listed entities as an investigation finds they used their position at Zee Entertainment to siphon off funds for personal benefit. Chandra and Goenka can file their replies or objections to the order within 21 days. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking this Tuesday morning. Quite a handful of them, so we'll discuss them in greater detail. But first up, as always, let's take a look at what the Asian markets are doing. Well, U.S. markets, they ended at highs, and that is something that we are seeing in the Asian markets as well, largely, so to say. The Taiwanese index is up 200 points, while the Hang Seng is seeing cuts of around 113 points. Nikkei has made a new high for 2023. That index is up 1.5%. There has been some weekly repo rate cut by China, so that is something that we'll be tracking for you as well, but largely in the green except for Straits Time and Hang Seng. It is a green Asian screen. SGX Nifty will come up for you on the screen, and that one is indicating that the start for our own markets, well, that could be in the green again. Remember, we did see some fall from the highs yesterday, but for now it's a 46-point bump up as far as SGX is concerned. Let's talk about the U.S. markets. That's where the real action took place, right? Wall Street ended Monday's trading session higher, with key indices closing near session highs. The Dow Jones gained over 180 points, the S&P was up 40, and the Nasdaq Composite closed over 1.5%. The S&P jumped to its highest level in 13 months, while the Nasdaq also hit its highest level since April 2022. Tech major Apple inched closer to the $3 trillion market valuation after shares rose to an all-time high overnight. The milestone comes a week after it launched the Vision Pro headset, its biggest product in a year. The U.S. May CPI inflation print is due later today, and the Fed is set to announce its policy decision tomorrow. CNBC's Steve Leisman is here to tell us what the market is expecting going into an important week. Steve.
By Thursday, investors are going to have a lot of new information on inflation, the consumer, the Fed, and the job market. Tons, as you say. It's going to set expectations for the months ahead. Here's what Wall Street forecasters think will happen. They're not always right, but here's the consensus. Inflation CPI headline falling to 4%. That's a big drop from the 4.9 we had last month. But you see that? That's the core, ex-food and energy. That's the sticky part, just down 2 ticks and still at a high level of 5.3% to maintain the Fed's concern. The Fed expected to skip and maybe hint of a hike, talking about a hawkish pause or a hawkish skip there. And the PPI comes that day as well. Thursday, we're going to watch jobless claims a little more closely than usual because we had that pop last week at 261. Expected to come down, be a little bit more tame this week. There was talk about it being a seasonal adjustment issue. And I like retail sales as a big number this week. Seeing down a tick, a tenth of a percentage point from the 0.4% rise in the prior month. But take out autos, and it looks a little bit better if you take out autos. Markets have embraced the skip and hike sequence, if that's what you want to call it, with a 73% probability of a pause this meeting and a 69% probability that they'll hike in July. The good news, at least for now, July is the last rate hike that's priced in. The bad news, no longer any cuts priced in for this year in the futures market. New Fed forecast this week could move the goalpost even further out. The Fed reported mixed news in its efforts to control inflation expectations. The New York Fed says longer-term inflation expectations did rise. Here are the numbers. The 1-year fell by 0.3. That's a good number, especially because it wasn't because people thought gas prices were coming down. It was other things that were responsible for it. The 3-year at 3, up a tick. 5-year at 2.7, up a tick. Those are areas of concern. The Fed hopes to keep high inflation expectations from becoming entrenched in the minds of businesses and consumers. It's slowly achieving that goal short term, but the longer term numbers seem anchored maybe a bit on the high side right now.
Okay, Steve, thank you so much for all those details. Let's stay with Wall Street. Let's listen into some important opinion coming in from Bridgewater Associates Ray Dalio, Goldman Sachs David Solomon, and Bank of America's Brian Moynihan on the state of the U.S. economy.
Can't spend more than you earn. Can't spend more than you earn without getting into debt. And if you have debt, you have to pay back the debt. The only difference is you can print the money. There are two things that end this. First, that the debt service payments to those who are holding the debt who need it for reward, they want to get paid back plus an interest rate. So you have to have those debt service payments. Those debt service payments increasingly encroach on your spending. In other words, either this thing compounds and that means that somebody's wanting to buy all that debt, but you have to pay back in one way or another, and when that happens, it encroaches on other spending. So that's debt service is one. The other big one is the supply-demand balance issue.
The U.S. economy has been incredibly resilient, and I would say that I have been surprised, over the course of the last year. I certainly predicted, given the economic tightening we've seen, a bumpier ride than we've had so far. But I do think inflation is a little bit stickier. And I do think that in the distribution of outcomes, there's a reasonable chance that rates do go higher. I'm not saying they're definitely going to go there, but I think you've got to be prepared for that.
And so the economy is slowing down. They're guiding it down. Will be a soft landing. Our economists think it'll be a recession, but a mild recession. And unemployment moves up, in the mid-4s, but that used to be full employment, honestly. So it's not quite the disruptive thing. Now, will that have an impact on all the economy, and will that ultimately have an impact on financial services? Of course it does. But the reality is that it's really going to come down to if people are employed and people are spending a little bit more, companies will have revenue and they'll be okay. And what you're seeing is that's happening. And you're also seeing the impact on inflation appears to be enough now that they're winning the battle.
Okay, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning. First up, Manglam is joining in today to tell us all the market cues that are in focus today. Manglam?
Well, yesterday was, as per script, we saw an opening on the way up, but then that was sold into, and thereafter we closed near the flat line on the Nifty itself. The Nifty has pivoted itself around that 18,600 mark. So that's something that we're watching. But there are a bunch of big cues all through this week itself. Yesterday, post-market, we got the CPI for India. But importantly, we're watching out for U.S. CPI and the U.S. Fed meet outcome that happens tomorrow as well. The U.S. inflation data, of course, comes tonight. For India, the CPI data for May 2023 was 4.25, which is a 25-month low. The U.S. CPI data is expected to be 4.1, and the FOMC meet is something that we'll be watching out for. It was good close on Wall Street. We saw the Nasdaq end about 1.5% higher, led by Apple. And the Asian markets on the back of that largely positive. A couple of indices are on the mixed side. The SGX Nifty indicating a positive start. The question remains once again, after this uptick at the open, do we see a sell-off or do we see higher moves going forward? Irrespective of where the frontline indices go, the mid caps and the small caps have been outperforming. We saw that in yesterday's trading session as well. The market breadth was firmly in favor of advances. And we had the financials, which continued to underperform. Today is a Tuesday, so it's the financial services expiry as well. That is something we'll be watching out for in the last half of trade. The FIIs, they sold for the second consecutive day in the cash market, 627 crores. The DI has bought about 1,800 odd crores. And remember, the lack of big decline yesterday led to a lot of the short positions being covered. So the FII long short has inched from 46 to 49%, and shorts have dropped from 54 to 51%. And the 20-day moving average is an important level to watch out for both the Nifty as well as the Nifty Bank. Nifty Bank mildly below that. For the Nifty, 18,450 to 18,500 remains a strong area of support.
Okay, those levels will be important to watch on the Nifty and the Bank Nifty, as you mentioned. Let's move on and speak about all the stocks that are in focus today. Vivek is joining us with that list. Hey, Vivek.
Well, good morning. Quite a few stocks to keep on your radar on the back of news flow. First on our list is the entertainment setback coming in as far as the company is concerned. A SEBI order yesterday has now directed SL Group Chairman Subhash Chandra as well as the entertainment CEO Puneet Goenka to step down from the director's position. They say that Subhash Chandra as well as Puneet Goenka cannot hold any key managerial positions in listed entities until further order. Remember, both of them do have an opportunity to go ahead and file their reply or objections within the next 21 days. Keep an eye out for SJVN as well. The company's renewable energy arm, SJVN Green Energy, has got a 200 megawatt wind power project, which through an EPC contract, the competitively bid price per cost for the unit was 3.24, and the cost of construction of this particular project is pegged at around 1,400 crore. Watch out for Inox Wind as well as Inox Wind Energy. There has been a group simplification that the group has done. So Inox Wind will now be merged with its parent entity, that is Inox Wind Energy. And when you're talking about the merger ratio, 158 shares of Inox Wind to be issued for 10 shares of Inox Wind Energy. Along with that, 158 share warrants at an issue price of 54 rupees each will now be issued for 10 share warrants of Inox Wind Energy at an issue price of 847. Canfin Homes will be another stock on the radar. The company has said that there's a board meeting scheduled on June 19th where the company would be considering a fundraising, and this would be via equity share issuance. We're talking about Engineers India Limited as well. The company has received an order of over 470 crore from ONGC. Lastly, JSW Steel, the company has been declared as the preferred bidder of mining lease for iron ore mineral in 2 blocks in Odisha. So some positive news floats for JSW as well.
Okay, all right, Vivek, thank you so much for that list. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, let's look at the 2 indices, Sonal. First up, the Nifty futures, there was some unbinding of open interests out there. But on the Nifty Bank, there was some addition to the tune of closure around 3.5%. That's a change in open interest. What do the FIs do? They covered some short positions. Closure on 12,000 contracts is what they covered out. And, now the positioning has come down from around 54% to around that 51% odd. In terms of buying options, well, they bought more calls than puts yesterday. They bought more than 2 calls for every 1 put, so that's pretty good news. But the heartening fact is now, yet again, we're seeing some put writing. So yesterday as well, you had more puts that were written than calls. And the PCR, we were highlighting that it's at the lower end of the range. It's moved up to around 0.92 odd. Remember, the one odd level is the midway mark. And why did that happen? Yesterday, there was a fair bit of put action. 18,600, 18,550 put. Well, there was big addition out there. In fact, between those 3 strikes, you had close to around 80 lakh shares that were added. And that explains why the bulls believe that maybe the base of the market is moving up a little bit. All eyes on the 20 DMA. Provided the 20 DMA holds out, you'll say yes, pretty much. That uptrend is intact. So the 20 DMA becomes crucial on the downside. And the resistance level is around that recent high that we saw just last week, around 18,800 odd mark. We're expecting the bears to come in and fight out there. Another important trigger will be the Nifty Financial Services Index. That plays out expiry today. So that will move the Nifty Bank as well a little bit. SGX Nifty suggesting a gap up, as has been the case. Don't chase the gap up. Wait buy for an intraday dip if you want to get in. Stop loss comes in at around 20 DMA. So that's the level that you're looking at. Back to you.
Okay, all right, Nigel, thank you so much for joining us with all those F&O cues. That's the trade setup for today. We'll slip into a break now. Up next, retail inflation for the month of May cools to a 25-month low at 4.25%. We'll get you more on the inflation print on the other side. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, retail inflation has cooled to a 25-month low of 4.25% in May as food prices have eased. Inflation has remained within the Reserve Bank's tolerance band for the third consecutive month. Meanwhile, India's industrial output picked up for the month of April. Lata Venkatesh is here to tell us more about the numbers. Lata.
Extremely pleasant set of numbers. The May inflation is lower than what the street expected, lower than even Reserve Bank's derived number of 4.4. It's come in at 4.25. And the IIP number for April also coming in at 4.25 against expectations of 1.3. Which was the CNBC TV 18 poll. So both growth higher than expected and inflation lower than expected. That's the best combo you can think of. In inflation itself, the positive is that core inflation has come in at 5% versus April's 5.2 and versus the CNBC TV 18 poll of 5.3. Core inflation tends to be sticky. That fall is more than expected is very important. And finally, food inflation also coming in a good 1 percentage point lower than last month's 3.84. Cereal inflation, which was feared because of rice prices, has not materialized. Cereal prices have fallen 2% over last month. The composite picture of inflation is that it is extremely under control, but economists and the Reserve Bank are not extrapolating this as a positive number for the rest of the year, simply because we have a potential El Nino event waiting to strike, perhaps impact monsoon. And therefore, at the moment, it's good news for now. No one is extrapolating it for the full year. Again, in growth as well, industrial output numbers very good in terms of consumer non-durables, also very good in terms of manufacturing, coming in at 4.9%. But there is a bit of a wait and watch in case the global economy decelerates in the second half. For now, a happy set of numbers on growth and inflation.
Oh, yes, definitely. Thank you, Lata, for joining us and making sense of these numbers and also pointing out some of the risks which are to be tracked going forward as well. Moving on, GQG Partners continues to be bullish on the Adani Group. Chairman Rajiv Jain downplays governance concerns and says will buy more stake in the conglomerate over time. Listen in.
We don't have any target or anything. It depends on how the fundamentals evolve. But yes, I've already said that we are interested in increasing our stake over time. We do feel, in fact, the numbers subsequent to a purchase, as the earnings numbers come through, they've been fantastic across the board. It hasn't gotten as much press, but the numbers have been from ports to enterprises across the board, massive beats. So yeah, we quite like how well they're positioned on a longer term basis. So yeah, we are likely to add, but it'll be. I mean, we don't have specific targets, dollar targets, because it depends on so many things. No, we are not at 10%. Actually, more. We are between 3 to under 5% across all of them individually. So it's actually, yeah, it was the increase was 10% from the original amount. But yeah, we are sort of low to mid single digits, but under 5%, because obviously there'll be disclosure once you cross 5. But we have not crossed 5 for any individual company. If 1 or 2% owned by some other family member, I don't understand why there is such a big deal. I mean, I find it amusing, because if you look at the Chinese, more than half of Chinese index is under VI structure. VI structure, so variable interest entity, you don't even know whether you own any asset, right? So the fact that people talk about governance issues, I would say, well, obviously you can buy none of the Chinese tech and more than half of China. So I think this is not really that. I mean, whether it's 1% owned or less. Our view is if they own a little more, family owns, like, why is that negative? As for the SEBI consultation paper, look, I have nothing really to add at this point. All I would say is that if you look at any other country, do we know exactly who owns what? Probably not. But I think one has to be careful putting more sort of red tape in the conversation.
Okay, all right. So that is the word coming in from GQG Partners on the Adani Group. We'll do one thing, slip into a break now. Up next, we'll get you all the cues from the commodities markets of big moves in the commodity space. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Well, it's a good time to get a check on the commodity markets. Big moves there. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning. What's happening with crude?
Oh, well, absolutely, Sonal. 4.5% of decline overnight, and we are trading at a 5-week close for the crude oil prices right now. So we are not too far away from $7 for the Brent prices, and WTI in any case has been trading below 70 for the last 3 trading sessions now. While there have been concerns about weak China demand, the Chinese data, all of that has been coming in less than what the markets were anticipating and less than what we saw in the previous year as well, even as the COVID restrictions have been taken away. And apart from that, yes, even as Saudi has cut output, but remember, Russia, Nigeria, UAE, Iran are all increasing output, and the U.S. output also seems to be increasing by almost 1 million barrels per day in this year itself. So that's what's weighing onto the markets. And to add to that, there are money managers now winding up their long positions. We have seen fresh shorts come into crude as well, and that seems to be weighing on. And clearly, the market has seen lesser volumes ahead of the U.S. inflation data today and the U.S. Fed meeting Wednesday. So ahead of that, it's going to be a volatile, choppy market.
Okay, all right. Thank you, Manisha, for joining us and making sense of that big fall at a 5-week low is where crude prices are right now. With that, let's do one thing, move on and listen into excerpts of U.S. Secretary of State Antony Blinken's address at the U.S. IBC India Idea Summit 2023, where he spoke about the partnership between India and the U.S. as well as the new Indo-Pacific Economic Framework.
We see the importance of the partnership in a shared commitment to address regional and global challenges, promoting health security, working with our Quad partners to build a free, open, secure, prosperous Indo-Pacific, where people, where goods, where ideas can travel freely and rules are applied fairly. I have witnessed India's constructive leadership on these issues up close these last 2.5 years. And I see it in their ambitious agenda at this year's G20, in our new I2U2 group with India, with Israel, with the UAE, the United States, and in probably more than a dozen meetings that I've had with my counterpart, my colleague, my friend, Foreign Minister Jaishankar. At the heart of the strategic relationship between our countries are economic ties. And under the leadership of President Biden and Prime Minister Modi and private sector leaders in this room tonight and beyond, it is growing stronger by the day. Last year, as you all know, trade between our nations reached a record $191 billion, making the United States the largest trading partner for India. American companies have now invested at least $54 billion in India, from manufacturing to telecommunications. In the United States, Indian companies have invested over $40 billion in IT and pharmaceuticals and more, supporting 425,000 jobs from California to Georgia.
And of course, you can catch all the developments at the U.S. IBC India Idea Summit 2023 through the Today Today only on CNBC TV 18. Okay, with that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.